Hey, 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 what's happening, everybody? It's the Flow Show. You got your boy Steve Straza on the one side, you got me, Sean McLaughlin, on the other. Hope you guys had a great weekend. Straza, you staying dry out there in South Florida?
Yeah, we were talking to Andrew this morning. I guess some storms might be headed our way. It did rain all weekend here, though. Just kind
We
of a
we were
very
just
odd
laughing
start to the
off
week.
camera because our studio guy that you guys don't see, he's based in San Diego and he's complaining about a hurricane in California. But can we even call that a hurricane?
I don't know enough about the climate out there, but it seems like they have other natural disasters to deal with that are equally as bad or worse. So everybody's got something, no matter
Everybody's
where you
got their
go.
thing.
Yeah.
Yeah. All right. Well, this is the Flow Show, and we are going to dig into any unusual options activity we may have uncovered over the last week or so and
Yep.
see if that can drive us down the rabbit hole into an interesting trade idea. And Straza, it's going to have a high hurdle this week for me because right now I'm in the MO of I'm looking for delta neutral credit spread trades. So what do you got? Hit me with the scan this week.
Well, let's start with that. We kind of mentioned it very briefly this morning on the morning show, which go tune in. Sean and I co-hosted today.
Woohoo!
Special show this morning. Um,
Probably the best show that's ever happened on the network since launching. I mean, you and I ran it. No coincidence.
I mean, thank God we have you, right? Because it's tough, man. Talking for an hour and a half on there by yourself. Like I applaud JC for doing that with Spencer while we were gone. That's
That's
a lot.
impressive.
So we managed just fine. Anyway, I mentioned when we were talking about the XLV trade they put on last week. It's been a long time since we got on an analyst meeting and you're like, hey, let's look to like sell some premium and bet on some range bound action. We've been making mostly directional bets for a while now, right?
Yeah, we've been pretty much bullish nonstop all summer.
So a change in environment, we've been very vocal on the blog and on our videos about the overhead supply levels that we ran into several weeks ago now, the changing intermarket landscape, the changing sentiment landscape, and the changing seasonality landscape, right? And for all those reasons, now all of a sudden we are shifting, different environment, use different tools and different strategies. Sean's out here selling some primo for the first time in a while.
Yeah, I mean, look, volatility is not certainly at red alert levels here. Like if you pull up my chart here, Gene, I got the VIX chart here. We are at the highest levels we've been at since summer started, basically since Memorial Day weekend. But these are certainly not oh shit levels, right? This is just it's a little bit higher than it's been, but given the fact that stocks are pulling back and not showing any signs of screaming higher anytime soon, that coupled with the elevated volatility just has me wanting to put on some delta neutral credit spreads, if for no other reason than to balance out my portfolio of struggling long positions that I have on right now.
Yeah. So you also mentioned this morning we did end Friday on a somewhat bullish note after
Felt
some
bullish, felt
selling.
like a bullish
Yeah,
little
uh,
day.
nice rebound, right? Nice intraday reversal, close towards the highs. Some really long wicks are out there on the daily charts, at least, and a little bit of follow through today, right? Like, I mean,
Well, we did. We've
it
given it up.
it depends on what you own. If like right now at 11:45, if you want to call this follow through or not, it depends on whether or not I guess you're a growth or a value investor. Because pretty much all the value and cyclical sectors lower on the day. Nasdaq, tech leading. Nasdaq and tech have been actually outperformers over like a 1 week ultra short term time frame.
Well, as we speak right now, I've got an intraday SPY chart up here on the left side of my screen, and we are making new intraday lows as we speak. So, not looking good at the moment.
So, all right, the follow through from this morning already getting faded. Let's watch this closely. Let's watch this action into the back half of the week here to see if we can hold. The indexes are at some key levels, whether it's the August highs or the S&P 500, or whether it's the pivot highs, year-to-date highs for something like that. Dow Industrial Average, there are some big levels here, so interesting to see how the rest of this week shakes out. You ready to talk about this list?
Yeah, let's talk about this list. I see the occasional or a couple red names in there, which isn't very often that we see that, but let's talk about
You know what they're shorting? GameStop.
it.
Bearish
Ooh.
flow, yeah, puts on the offer, very short term, this week's weeklies in GameStop. So that's the bearish flow up top, and then down low, that's Skechers. I
Still
didn't
can't
like the
believe,
list.
still
What?
can't believe GameStop's an $18 stock, but hey, not looking good.
It's crazy. Uh, so I didn't like the list again this week. It's been like 2 weeks in a row now. Either this show is going to go great and I had a good idea here, or it's going to be a flop. We'll see. But I brought along two bonus charts that aren't from our option scan, just to give us something cool to talk about, because I think they're as good as any charts in the current market. Before we get there, one name did stand out. We went through all these. Something like Chewy or Pinterest shown here. Any of the growth names really aren't looking good. Pull up the charts on your own. You'll see what I'm talking about. Match Group, same thing. That's like Tinder and Match.com. Geo looks pretty weak. Pfizer, I mean, if you're going to buy a healthcare stock, that's been one of the weakest. So really slim pickings again this week. We did have one oil and gas midstream operator. It's a pipeline company. Big old yield here. This is the Williams companies, WMB. They were buying calls on the offer all the way out in January, the 35 strike.
Well,
So
I mean, of all those charts or all those companies you just named, I mean, that has the best looking chart, at least with my eyes.
pretty much at the money. But if you're going to go out, why not own the common? Collect a yield on something like this? I don't know. These pipeline companies, these midstream operators in the oil and gas space, they're slower moving. They're not the juice trades. They tend to underperform. These guys have been in secular downtrend for a long time now. With that said, there are some nice charts out there, and you would think with all the other groups, all the other industry groups within the energy sector working, these guys at least can play a little bit of catch up here. I think that's probably the trade. We do have a clear level here at like 33.50.
Man, I'm just looking at that Williams chart that you have up there, and man, that COVID breakdown and bounce back, that's something else. I mean, that's not a unique chart at that time, but man, it's pretty stark on that chart.
The market for like a handful of days there, almost a week. Remember when crude oil went to zero?
Yeah.
Had a tough time pricing these stocks. When we look back, it's so clear. Like, of course, what a bargain. Would have loved to be buying any of these energy names, but back then people were scared. Oil was at zero, pandemic was breaking out around the world. People were freaked out. And I'll bet a lot of people didn't buy that awesome dip.
Well, look, I hear what you're saying about, this being a slow mover. Maybe it's something that you buy with common. I don't hate that. But one thing I want to point out on my chart that if you are, options inclined like I am, bottom right of my chart here, you'll see that implied volatility is near its lowest levels that it's been for most of the year. So that sets up a good environment to be just a simple long calls buyer. It's not you're not going to pay, you're not going to overpay for calls here. So if you are bullish, and there's no reason not to be bullish this chart, buying calls, I mean, you could pick your expiration. I don't think any expiration is better than any other, but if you want to go out to November or January, don't hate buying calls here. I mean, look at that. I mean, you said that the action was on the January 35 calls, right?
January 35s.
I mean, look at that price, dude. I mean, those are basically at the money calls. You can get them for $1.70. I mean,
Nothing.
that's not bad.
And this is a stock that, we sit here and call it slow moving, right? Listen to us. It's quadrupled. It's quadrupled off its lows.
Well, I mean, those lows were something
I know.
else. I mean, that was, I would look at that chart and say that the lows following COVID, after the bounce and then it pulled back around, was that 17, 18 level? I feel like those are the real lows.
What I wonder, what was implied volatility like at those lows? Was it a bargain or had it completely blown out? Or do you
Let's
have
see
that
if we
data?
could. Let's see if we can pull that up here. Let's see. We'll have to do. Will a
Like
weekly chart get
like
me there?
volatility spikes during these, crash events, right? But does it even spike on calls for something that nobody wants? I would imagine still yes, but I wonder how good of a deal you could have gotten down here way
Yeah,
back.
no, it would spike. I'm trying. Let's see. This is. I don't think my chart goes that far back. I mean, I could do it, but it'll just take a little work here. Um, let's see. Go back 5 years. Let's
There you
do a
go.
weekly chart. Okay,
Ah,
so I mean, here,
yeah, it's
here you
spiked.
see it.
Wow,
Vol spiked like crazy. I
real
mean,
good.
look, if you were an aggressive call buyer when this thing during COVID, when it spiked down to $10, let's say,
Doesn't matter
um,
what volatility was.
I mean, you would have paid through the nose, but you still would have made money on that trade. I mean, the stock did double off that low.
Yep.
But, you would have been swimming upstream. What a call buyer, and again, you had to be really has some stones here to buy some calls into the teeth of this sell-off. But let's just say for argument's sake that someone bought these like a 10 strike call that expired 3 months out, right? When this thing was screaming higher, you would have been making money, but you probably would have been looking at your position saying, I feel like I should be up way more.
Yeah.
Because
Right.
what's happening is you're seeing the vol getting crushed right here, coming back down. Yet you're swimming upstream. So where you think you might have 4x'd your money, maybe you only 2x'd your money, right? Still a great trade, but that's what happens when you're swimming upstream on a vol compression, which is what would have been happening if you were positioned, even if you were positioned correctly, long calls as this stock was rallying. It wouldn't have felt as satisfying of a win.
And
If you bought common, it would have felt great.
not only that, but on a move like that, we're technicians, so maybe more so us, but I think any prudent person would have probably taken profits too soon. On a V like
Myself
that,
included.
I mean, I definitely would have. So it's easy to look back in hindsight and say you would have
Yeah.
traded this perfectly. Let's talk about my coal stocks. What do you say? Are you ready?
I love talking coal stocks. Yeah, I feel dirty when we talk about coal stocks.
Well, listen. It's as dirty as it gets, Sean. All right. Disclaimer: there was no bullish options activity in these stocks, but this is our show. It's the Flow Show. I find these charts very interesting right now, particularly considering what the broader market has done over the past few weeks. What do I mean by that? The market's been selling off, pretty broad sell off. These stocks are breaking out to new all-time or new multi-year highs, at least in both cases. Excellent risk reward, really clear levels to trade against. This is the coal index, an equal weight index of all of the coal names that we track. Here are the charts I'm talking about. Alpha Metallurgical Resources, AMR, and Consol Energy, CEIX.
Both are great looking charts. I was just looking at CEIX.
I,
Um,
yeah,
Same story, like we were just talking about the other one. I mean, low vol. See in my chart here,
super low.
volatility is very cheap. If you like this, you could buy calls and not overpay for them. I personally, Straza, especially given the market environment we're currently in, I feel like I can afford to wait for a little bit of a pullback. If I could buy this stock in a pullback around, back to 82, in the 80 to 82 range, I would like it.
Yep. I,
But I'm just nitpicking.
I even for me, I would want 78, right? So you could see it real clear right here. Full disclosure, I'm not in either of these. I've been stalking them since last week. I thought we would get some sort of like textbook retest. Haven't yet. But it's really the 77, 78 level of Consol Energy. I'm in Peabody, BTU, calls in common, just because it's the biggest name. But I'm looking to get into these this week. And boy, if we had options priced anything like those Williams options, low implied volatility,
Yep, cheap.
clean breakout after 2 years of nothing. Like, look at this chart, CIX, straight line higher off of the COVID lows, and then just digesting gains for like 1-2 years, just straight sideways, tight consolidation up here off of this massive, massive uptrend. I think we get another leg here. I think leaps in these names are really interesting. So let's look at some.
Yeah, I mean, I'm looking at on my screen. I'm looking at a 1 year chart, but when I look at your chart, you got much more color there, much more time, and it makes me think maybe I shouldn't be so cute with my entry. I mean, maybe getting in right around here is the level. The only thing that's holding me back, Straza, and it's holding me back on everything, is that I just don't want to be aggressively bullish in this market environment, and it has nothing to do with coal stocks. It's just in general.
Totally get that. One way we can mitigate, right, the risk of like broader selling pressure and what that could do to our positions is by buying relative strength, though, right? At least these companies have been showing that real short-term relative strength where they've been holding up even as the market's been selling. That makes me feel a little bit better, which is why these are the names that we're talking about today.
Yeah. I mean, look, buying relative strength in any market, generally speaking, is a good strategy. Nothing works every time, of course, but you know, if the market does turn around, stocks like this that are showing relative strength now are likely to continue. Could be the next leaders of the next cycle. Who knows? But this is something I definitely want to keep an eye on. I like this setup.
How liquid is the options market for
Good
CA?
question. Good question. Let's take a peek here. I'm looking at let's look at the January and December options.
I'm worried
Um,
it's going to be lonely out there.
you know, the open interest, at least in December, is not all that great. In January, it's much better. You can
Okay.
see here in this column here, you can see, you know, open interest in the
1,000.
thousands. But more importantly, I think, is that the bid-ask spreads are relatively tight. Like here's an at-the-money call in
Nice.
January.
Yep.
Bid 910, offered 940. That's not bad. In December, you know, it's a little wider. But I think these are liquid enough that you would get a fair fill if you put a limit order in somewhere between this. Like if you're trying to buy a call in these December 85 calls, I bet if you put a bid in at, let's say, 810, you would probably get filled. You might have to be a little patient, but you'll get it.
So those are 85s. So
Yes.
this thing needs to move another $10. Um, these are cheap though. They still seem a little expensive.
I mean, look, I agree with you. They do feel expensive, but compared to where volatility has been over the past
Yeah.
year, this is as
Okay.
cheap as it's been,
It's
right?
a
It's
high
all
beta.
relative.
It's a high beta name, so they're always going to be pretty expensive. It's relatively cheap for this ticker.
Well, I mean, look what it's done just in the month of, I mean, in the last 30 days, right? This stock was at 65 bucks 30 days ago. So it's already moved 20 bucks. What's that? That's 30%.
Listen, this is a coal stock. We talk about how Williams quadrupled off the lows. If you want to see crazy moves off the lows, go look at coal stocks. This thing went from 4 to 80.
Yeah.
So,
All right,
uh,
so let's put a bow on this, Straz. Let's wrap it up. The fact of the matter is, we're in a market environment right now where, if you're going to be bullish, if you're going to be aggressive, you have to be very picky, very selective.
yep.
I personally am not in the mood to be being aggressive on the long side right now. I'm looking for delta neutral trades. I'm looking to sell some premium. So getting into this energy play right now, this coal play right now, is not high on my priority list. But these are names that you and I are definitely going to be keeping an eye on should overall conditions improve, because this is probably going to be a leader. And we could probably get into it pretty cleanly with some cheap call options over the next couple weeks if we like it still.
Yep. These will definitely be on our hot list.
Yeah.
And
All right. Well, hey, this has been the Flow Show, guys. I'm Sean McLaughlin. He's Steve Straza. We do this every Monday. I guess this is our new time slot, right?
yeah,
11:30 Eastern.
every Monday, 11:30, Low Show, Stock Market TV.
Right on. All right, everybody. We'll be back next week. Until then, you can find me and Straza and JC on the morning show tomorrow, starting at what time you guys start? 8:30 Eastern. That's right, 8:30 Eastern.
Yeah, 8:30 to 10 every day. We're going to do a better job also on the show monitoring the chat. I just pulled it up. We didn't really have much today. The chat is too quiet, it looks like. Yes, we agree. So let's get the chat going. We'll do better. I'll remind you guys all next week. Maybe we'll even take some questions at the end if we go short or something.
Awesome, awesome. All right, guys. Until next time, we have been the Flow Show. He's Steve Straz. I'm Sean McLaughlin. We'll catch you next time. Take care, everybody.
Peace.